Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 7th of December. So as we start off this new week, we've got a relatively light fundamental calendar, not a great deal of events on the schedule today. Although we do have a number of big key events going on behind the scenes. So of course we've got the Brexit trade negotiations still progressing, no conclusion over the weekend, and there was widely expected to be some sort of conclusion on those talks over the weekend, but they still seem to be dragging on in the early part of this week. There's also anticipation that there might be some kind of US stimulus deal, that even being a smaller deal, that may be agreed and deliverable before the end of the year. So that's in the back of the minds and certainly sort of helping to keep some of those US markets focused. Before we take a look at some of the markets that we're looking at the beginning of this week, I just want to tell you about the live event that we're running on Wednesday. These sessions are run at live 9 o'clock Wednesday morning UK time. Everyone's welcome to join, and you can find details and the link to register and join that session underneath the video. So let's have a look at the markets this morning. And if we have a look first of all at gold, because last week we were looking and talking about gold pulling back into the 1850 area, and or as the zone, I should say, between 1828 here and up to 1850, because this zone here is the sort of fair value zone. Down the 1850 area, if I just sort of zoom out, is the sort of key technical level, right the way through here. Clusters with a number of things with fair value, with also the structure level, and also the 61.8% fib retracement of that recent move in the market. So this is a good potential sort of turning point if we're going to see further weakness in the gold market. And you can see that that's now starting to materialize. So we had a bearish candle here on Friday after the market sort of kissed that 1850 area. Today so far the market has broken below Friday's candle and still sort of sitting at this moment within a sort of reasonable range of it. So if we see further weakness in this, now let me just, before we go to the lower time frames, let's just look at where this market could go to. Technically speaking, we could be looking for the old low and maybe beyond, and that could set us down to 1750. I think that 1800 though on this market is also quite a good technical level, so I'd look for 1850 as first target at least, and making sure that we're certainly going to be looking at any opportunities to make sure that we were covered and at least risk free by the time price got to that 1850 area. If we come down to the lower time frames, we can start to see that there's sort of a top in formation starting to materialize here in gold. We've got some divergence or sort of convergence to the short side, I should say, here on these markets, and as price starts to sort of break through some of these lows, then we could start to see some weakness. At the moment the market is ranging in this sideways range. Once we can start to get past, I suppose, these sorts of lows down here, then we're going to start to see some more significant weakness. So probably look for trend formation to start, a break through the 1826 area, and then look for maybe a pullback and a rejection of it. Now if we come across to the Dow and take a look at what's going on here, these markets last week didn't manage to sort of pick up a huge amount of momentum. They did manage to make new highs, but overall daily ranges were rather sort of limited. So far today the market has sort of pulled back into the 30,000 level, where we've had key resistance before and also now acting as support. It's also such a huge sort of psychological number for this market too. So we've got a key area here. If the market finds if the market gets underneath and breaks underneath that 30,000 level, then we're likely to see some more significant weakness coming in. We've come down to the 4-hour time frame here. You can see how precisely tested 30,000 is. We can see that the market's tested that level this morning. We've also got good fair value zone here around that 30,000 price point at the moment on these mid time frames. So I think that's the key decision point. If the market's finding support here, look for opportunities for a stronger market as the week goes on. If price action sort of breaks underneath 30,000, then look for more weakness, and we could see a move down to the 29,600, which again has been another significant sort of price point for this market. So there's a fairly decent sized trading window if price does weaken underneath that 30,000 price point. Now coming over to the currency markets, the dollar is strengthening this morning in the context of a rather weak market. So the dollar's been selling off and weakening sort of fairly significantly over the past sort of few weeks and months. This morning we're seeing a burst of strength coming back into the dollar after extended weak moves. So that strength in the dollar is likely to have an impact on some of the dollar related currencies and could help these markets have some sort of significant retracement. Euro dollar here is one of our picks because it's looking quite sort of technical. We've got some good structure in these markets starting to form now, and of course the sort of Brexit trade negotiations between the UK and Europe at this moment in time are not sort of filling the news wires with sort of positive news, so not likely to sort of help the sort of positive state of euro. That together with the strength in the dollar is certainly helping the market to have a retracement here. So a good retracement area, possibly back into this 120 level, as you can see on the daily time frame. It's a big psychological level. It also coincides with the fair value zone for this market. So even if we continue to see strength in euro dollar, some sort of retracement back into 120, which is quite a decent size sort of move at this moment in time, is what we're looking for. And once we get back in here, then, and if we get back into 120, then we'll certainly be looking for support around this area and maybe a continuation. But we'll need to reassess the markets at that time. So there's a few markets there that we're keeping a close eye on in price action at the beginning of this week. I certainly hope it helps and look forward to speaking to you on Wednesday. Bye for now.